There is a lot of green across the financial markets on this beautiful Wednesday. A lot of optimism around the debt ceiling. Don't know if that's the most well placed, but we'll see. Before we dive into our discussion around that, please hit the like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love following the markets, tracking the macro, trying to find our, pick our spots to get in and out. So do your own research when it comes to any buying or selling. Kev, we see green all over the place. Tech is having a good day. The dollar is doing well. The VIX is down. Crypto is seeing a little bit of a rally. Everyone is under the impression that all is fine and dandy with the debt ceiling because Biden says so. But I am not convinced. I know you're not either.
Oh yeah, I'm not convinced for a single solitary fucking second. This is absolutely insane to me how everyone is super excited off of literally we're just, going based off words at this point. We're going off of what McCarthy said and what Biden said. And obviously we kind of know that the US is not going to default. They're going to raise the debt limit. But again, is that's more irresponsible? And in some ways, is the US going to continue to spend more when we're in a high inflationary point in the U.S. economy? Yeah, it seems like that's going to be the play, but apparently that's bullish. So what do I know? The market obviously is always right, even when it gets to the point where we're, nearing recessions. The market definitely is always right.
Good to see you, Ace. Welcome back. Happy to have you as always.
Welcome
Yeah,
back,
there
guys.
is, everything is about the debt ceiling at this point. The quotes coming out of it, Biden was, all acting like everything was fine, and McCarthy's like, yeah, we're still not there. It sounds like they are each kind of narrowing the scope of the number of people who are involved in this in an attempt to kind of tighten things up and make it move faster. We also see, the timing was just absolutely perfect, where Jamie Dimon and I believe the CEO from Citigroup happened to be in Washington today for their annual lobby meeting, a meeting with Schumer and Yellen, and it's just the timing is very great coincidence there. I think that they're trying to do everything they can to make sure this gets done, so what works out best for them. I think that we're seeing just way too much optimism. The VIX is back under 17. It's down like almost 6% today. If I had hair, I'd be pulling it out right now. I'm so frustrated. But at the same time, this once again presents an opportunity to maybe take a little off the table. I know that there's a lot of mixed thoughts right now, a lot of bullishness. There are a few things, though. Fundamentals are just thrown out the window. Like Bundy, good to see you, man. The fundamentals are thrown out the window. Like everything is purely based around what the markets are anticipating with rate hikes and the debt ceiling. At this point, I saw data today from someone I know who works in one of these businesses and it's not like insider shit or anything. This is readily available, that markets are pricing in 3 rate reductions this year in September, November, and December. That's what the markets are pricing in. Meanwhile, I'm looking at the Fed funds probabilities, and in the last week, so this day last week, there was a 99.6% chance of no rate hike, 0.4% chance of a rate hike of 25 basis points. Today, that has dropped to a 71.6% chance of no rate hike, 28.4% chance. So markets are pricing in 3 rate cuts when I'm not convinced, and I know you're not convinced, that the Fed isn't done raising rates yet. Like nothing in the data goes to show that we're going to see rates come down. Like inflation is still crazy high. Unemployment is still too low. And they haven't broken anything yet. As we've said over and over again, nothing has broken. And for us to see 3 rate cuts this year, it would require something to break. And it would have to be something pretty damn big. Like a major bank would have to kind of collapse, sort of a thing, for the rates to come down, or a ton of regional banks would have to collapse all at once for the rates to come down, is what I would think. But it just doesn't really make a lot of sense to me. It feels like the market is overly optimistic, and I'm still not ready to put the cash. I have my long-term positions, but I'm not ready to put fresh powder into the markets because there's so much contradicting data points right here that I just do not understand it.
Yeah, absolutely. And I think right now, America's pastime is debt. I think that's the big thing that people aren't really acknowledging how important that is going into the end of Q3, Q4. Uh, Everyone from borrowers at the retail level to people who regional banks and even some of these larger banks, like everyone has exposure to debt at some level, right? And all it takes is some of these banks, some of these people just to go under, not to pay delinquencies, defaults, bankruptcies to just continue to pile up. And we're going to see some, I mean, we're not even going to see a catastrophe. We're going to see a cat ass trophy. It's going to be absolutely terrible. Uh, People are just super optimistic, hoping everything's going to be okay. Again, I get it. We're in a multi-year bear market. Everything has been bleak for the past year. We saw a little bit of a relief rally from January to, I'll even say now, considering around here, May.
For some of these companies, it's more than a relief rally. I mean,
Right. All-time highs in some cases.
let's look at goddamn Meta, which is at $243 today. And I'll harken back to October 30th when Jim Cramer was on TV crying about it, and it was $100.10 per share. And I mean, that's a 2.5x in and that's not a crypto token. That is a stock that is 2.5x in 7 months, which is absolutely wild. We look at my sweetheart, Nvidia, which is currently has broken $300 a share for the first time since, I believe, November of 21 was the last time we saw. Let me pull it up. January 3rd of 22. Sorry. So in the last
market,
year and a half, basically. So it's probably not going to get to all-time highs because all-time highs were 340, but it is on a monumental rip right now. Like if you look at the monthly on Nvidia, it's like 5 straight months with big upward movement. You could look at Apple, you can look at Google. Tesla's having another big run. That was back at 100 a share, so it's almost 2x. Like it's been more than a relief rally at this point. A relief rally is normally like a couple months. This is coming up on half a year of a lot of movement in big tech. Now, not every stock in the S&P has performed that way. Crypto's had a nice run as well, but this is like kind of an extended rally, I guess, or like a mini bull. But there's still too much like in the macro that looks really bad for me to believe that like we're going to continue this through the end of the year.
Yeah, absolutely. And again, I think a huge part of this too is when we look at some of these larger indices, the S&P, the Dow, the NASDAQ, there's been huge resistance for a lot of these. NASDAQ, I'll say, is the exception because it just seems like it's been climbing for the longest. It's been going in that parallel channel up. But for like the Dow, I bring it up every time, 34.3. That was like a huge level of resistance. It hit its head like 15 times on it. If we look at some of the daily charts and candles, and obviously yesterday we were at $33,012 or 33,012. And it's like, once it goes under 33, I anticipate the psychology of the market being, just taking it down to halfway, negative 500 points. But today, look at how the Dow is rallying, right? And again, this is all off of hoping that the debt ceiling doesn't become an issue. However, for a market that prices in everything, are they pricing themselves into this market too, or allowing market makers to price things into themselves? I was telling you before the show, I really do think that this is going to be a massive sell-off event. This might be buy the rumor, sell the news. Finally, debt ceiling is absolutely, we don't have to worry about it. The U.S. is going to continue spending. And, people think that we're going to go into a bull market because we're not going to see something that's never happened in the history of the United States. We're not going to lose our AAA credit rating. And next thing you know, people are, exposed to the markets. They're going to get absolutely taken out by people who don't believe this. I mean, look at Jamie Dimon and JP Morgan. They're saying that a recession is inevitable now. That was this morning on Bloomberg. I think a lot of people know this. A lot of people who have a ton of money in the markets that are big players, they all know that a recession is coming. They've been saying it for months, Q3, Q4. That's when it's going to hit, right? But a lot of retail and a lot of people, maybe not as powerful as some of these people, some of these regional banks are really hoping that things just turn around. And they're just trying to get every opportunity to get back in the market and hope that, we're pushing our way up. I don't see it. I think big money has the right idea here. I think that even if the price is pushing up in the short term, when we look at the macro, nothing has absolutely changed. If anything, it's gotten worse since January, since we were talking about it. We started this new show. Yes, Ace, 100%. Retail is absolutely going to get wrecked. I don't see a way where they don't, right? They're going to be the ones who are holding the bags while institutions are absolutely just dumping on them.
So right now, like we can say that a recession is priced in. kind of, right? Like everyone is talking about it, everyone is acting that way. But what isn't priced in is stagflation, right?
True.
So
Yeah.
like high unemployment, high inflation, and low demand, and we're in that situation where if unemployment goes up like the Fed wants, but we're still fighting this high inflation, and then with the credit crunch and people, we're going to see student loans get turned on. We talked
Yep.
yesterday about how bad credit card debt is and how high mortgages are, and we're going to have less demand if people have less disposable income. So what if we hit that point of stagflation, which is worse than a recession, and all of a sudden we're in this really bad spot? And like it seems like we're heading there. Like I can't put a percent on it, but just if you look at those three different areas that constitute stagflation, it's all lining up that way.
Yeah.
And so I still feel very comfortable just sitting and waiting to see how a lot of this stuff plays out. Like I didn't sell everything at like near the top, but I sold some stuff. I didn't buy enough near the bottom. I bought some crypto. That's fine. But I'm not ready to say that like the worst is behind us, because there's just everyone wants to talk about the recession part, but no one wants to talk about stagflation, and it seems very very like a decent chance that it's going to happen.
Oh, most certainly. It seems like it's going to happen. Again, I think more and more people are starting to talk about stagflation too. Like maybe in the last week or so. Like seriously, I've seen a bunch of videos on YouTube start to pop up. Like, what is stagflation? Uh, it's a very real possibility, and it's more likely it's going to happen. It's a high probability. Uh, Again, if the market continues to do as it does, wants to just rally off stupid things, it's giving me a better opportunity to short more. That's my mentality going into this. I don't see a world where the equity markets, crypto or anything like that is going to continue to rally into 2024. I think that we've had a nice run beginning of the year. I don't think that's, sustainable. I think a lot of people are just hoping that we're in a bull market. We had a 1 year bad, price. Now we're going to go into a new bull market. It's a new cycle. The Bitcoin halving, Litecoin halving, all this stuff is happening up pretty soon. Man, I think that we're heading for a trajectory worse than 2008. And every day I look at all the data that's coming in, I see the optimism and I see how nobody is, even if they are pricing in a recession, everyone's considering it a mild recession, right? That's what we're seeing headlines across. It's going to be a mild recession. You don't fucking know that.
To me,
Again,
that reminds me of, I'm gonna make a football reference here, but that reminds me like when NFL commentators or analysts are talking about a player getting a concussion, but it's a mild concussion. There's no such thing as a mild concussion. It's a damn concussion. Like it's not good for you. Just like
yeah,
a mild recession is still not good for the economy. Let's just be very honest about that. So
exactly.
I think that's it. The media is downplaying a lot of stuff, and it feels like they're trying to spin everything in the positive. Maybe it's just because maybe A, it could be that they believe it. I don't really think that's the case. B, it could be that someone is kind of pulling the strings in the background. That seems very likely. Or C, it could be the fact that people don't want to hear bad news anymore. And so they're just telling people what they want to hear in an effort to keep ratings up. Because we're like the bad news bears of
Yeah,
the financial world with our handful of viewers, but would we get more viewers maybe if we were like out here shouting from the rooftops that everything is a-okay? Could
yeah,
be, but then we'd
absolutely.
be full of shit, and I don't really feel like taking it in that direction. So I think a big part is like they realize that people don't want to hear bad news anymore, so they're trying to paint as rosy a picture as possible, and it just doesn't make sense to me.
Yeah, and again, here's the best part. When it does drop, when this market absolutely collapses on the American people, they're gonna look for someone to blame. They're gonna say like, "Oh, how could we miss this?" It's like, "Oh, well, you guys fucking lied for 12 months about what was actually going on in the background and the markets, all the data. We're just spinning every single positive, negative thing in a positive light to the point where people didn't really necessarily worry about the markets or how this would affect them 6 months from now. 6 months later, here we are, and now we're at 7.6% unemployment. Inflation is finally starting to come down, and the rates are finally starting to drop because we destroyed all the regional banks. The housing market blew up, and the auto loan markets, everything's just in the fucking shitter, and it's probably what's going to happen, right? And everyone's just going to be absolutely upset. And if we're looking at the Big Short, they're probably blaming the poor at the end.
Yep. Yeah, it's inevitable. It's happening. Don't think it's great, but we'll see what happens. Anything else that you want to see in the, or you want to look at the charts or anything jumping out at you there?
Absolutely. The dollar, man. Dollar is kicking ass. And right now we're seeing a little bit of a pullback. But again, I said this is the summer of the dollar. I might have said it the other way around last time, but that's what I meant. The summer of the dollar. DXY is, well, this morning went above 103, which is absolutely insane. And again, it's kind of weird when we're seeing some, the stock market obviously rally too. Like we're about 400 up on the Dow or 385, but we can see how much the DXY has pumped despite being pretty much overbought for the past, 3 or 4 days, right? Obviously, we wicked up to the heights at 103.1, and we came above the 50 moving average. 50 moving average absolutely is resistance, and the fact that we bounced off it and we started to push up more, I do think that we are going to find some level of retracement here, or consolidation period to allow this to reset. The dollar has just been absolutely hot the past few days, and I mean this is a bullish sign for me. I think it's amazing, and again, 50 is going to follow this if it just follows the 50 as support, comes down, breaks back above it, and the 50 follows it with another couple of green candles. We're going to get above the 200, and 50 above the 200. That cross is considered obviously a golden cross. That's what you want to see for bullish price action, right? We got the death cross down here. Obviously, the price came down. But if you see a golden cross, these things are absolutely great for price action. You're going to see us shoot up. 105 is my target right now, 105.69 if we're looking at this on a macro level. Let's go to the weekly real quick. Weekly, you can see that despite all this progress that we've made from down here, we're still barely into the we just broke out of the oversold area, right? That's great. We're going to probably test this 50 the 50 moving average on the weekly. If we get above that, obviously that's extremely bullish. And again, our resistance right now, in my opinion, is probably the 50. That's light resistance, but then the major resistance at 105.69. But just look at how we were talking about this back here when we bounced off 185. We were talking about how this could be a double bottom, and it's going to form this W shape like this, right? It's perfectly mirroring that right now. Like I think this couldn't be a clearer pattern of a reversal that we're seeing for the dollar, and that paired with what? Let's see, the weekly. Let's look at the monthly. Monthly, it was overbought for a period of time. We came into the oversold, but we're oversold and the price is pushing up. This thing seems like it's just primed. Like this could be possibly the place where people are putting a lot of their money, and maybe it's just because in times of fear, people don't know really where to put their money, where to keep their cash. Just keep it in the dollar, right? The U.S. dollar, even though people don't necessarily trust the government, at least your money's still going to be there. I think that's a lot of the mentality too. And then maybe people just really want to buy up some of these risk assets when they're dirt cheap. So people are holding cash right now. And I think that we're going to start to see this, grow over the summer. And again, Ace came up with this and said he agrees max pains in Q3, Q4. Yeah, that's when I absolutely believe that the dollar is probably going to be its strongest since, September of last year. So I think that we're going to see an absolute cycle where we just go straight up. Dollar is going to continue to be strong into the summer, into Q3, Q4. And again, once we get to these top ranges where, it's an absolute blow off top, I think that's when we're going to start to see the end of the bear market. Hopefully at that point, we get all the, the blood's obviously going to be in the streets. Equities are going to be down. Crypto is going to be in the shitter. But, the dollar is going to show a lot of strength and it's going to be the top. And hopefully people who have cash on hand are able to buy up some of these assets because it's going to be absolute steal, in my opinion. Not financial advice, but for me, when the dollar is shooting up that high, I'm going to make sure I have enough of them to buy some of these assets when they're super cheap. So I'm super bullish on the dollar. Couldn't be more bullish on anything in this market other than the dollar. This is absolutely my go-to for going into Q3, Q4.
Yeah, there are going to be 2 Fed meetings in Q3, one in July, one in September. I think we'll start to see, the markets realize that a cut isn't happening in Q3, and that could lead some of it. But it's probably, like you said in the past, something that we don't even see coming. Something will happen that will cause the markets to take a big move down because there's a ton of optimism right now. Anything else that you want to look at, crypto wise, index wise, individual stock wise, anything jumping out at you?
Absolutely. Bitcoin dominance. And again, I bring up the DXY and Bitcoin dominance because these affect, the price for crypto and, the stock market, right? We see that we took a pretty good dump on Bitcoin dominance this morning, right? We were at, let's see, it was low. or we were at the low today was 47.89, and we're at 48.08. So that's a pretty good pop after seeing, Bitcoin down, I think at 26.6. That was where the level was today. Now we're at somewhere around 27.1, or no, oh shoot, it shot up 27.4 where Bitcoin is. Wonderful. It's a great level to never mind. I'm not going to say that because I can't give financial advice, but I see Bitcoin dominance climbing, and it's just, come on, let's look at the volume for Bitcoin right now too. Extremely low if we look on the daily, right? It's comparative to where we were here. The volume is extremely low. The price is pushing up. The dollar is still extremely strong, and Bitcoin dominance is absolutely strong. It hasn't given in yet. I think that this still needs to climb a little bit more, and we might just be at a perfect place where, again, I think that this is going to be a buy the rumor, sell the news event for the debt ceiling. I think this is just lining up for a perfect opportunity for the markets to dump on retail. Bitcoin dominance is just too damn strong right now for you to get your alts to be pushing up any further. They might push up a little bit, but it's not going to be this alt season or anything like we saw with the meme coins. I think Bitcoin being strong here is going to absolutely hurt trading pairs for some of these alts. It's not a great look for looking optimistic, despite the markets feeling optimistic. I think this is a matter of just grabbing liquidity right now, just hoping that people who are shorting the market here are getting liquidated a little bit, but I don't think there's enough volume to push this price up much more. So even if Bitcoin does decide to dump here, I think that since the dominance is so high, I think alts are going to bleed again faster and harder than Bitcoin, and might see dominance continue to rise as Bitcoin dumps. But when I look at, they're going to pull up Bitcoin real quick too. There was the one level I was really worried about, and that was the 50 moving average on the daily. Again, I still thought that there was a good chance that we were going to hit it. We got really close here on Monday. We get, obviously we were at 27.660 or something like that, and we needed to go up to about 27.7. Obviously, the 50s come down. There is still an opportunity where we do hit it. Like, I haven't crossed this out. It could play out like this, or 50 comes across and we're going to slowly climb. Maybe that happens today where we just absolutely hit this level, and that's our reversal wave from obviously the first impulsive wave that we see on this macro, which began in like May 6th to what's today, May 17th. So came down. This is our reversal or relief. Once we get this to the overbought, I think, and we get rejected from this 50 moving average, I think the next move is obviously down. Again, this is just based off the Elliott wave theory structure, but for me, I don't necessarily think that Bitcoin is going to be pushing up a ton higher than I don't know, let's say some of this resistance here up at like 28. I think that what we're seeing right now is absolutely the end of this move to the top. We're going to find resistance on this 50 day moving average on the daily, and then we're going to just start to push down. Again, we have the 200 down here around 25,000. I still think there's a pretty good amount of liquidity down there, and then we're going to have to see how this plays out. But again, I'm playing this game on the macro. Bitcoin dominance being really high right now doesn't give me a lot of confidence that altcoins are going to be taking any moves to the upside. And again, we're seeing extremely low volume, and I am still eyeing this head and shoulders pattern. I haven't given up on this. I still believe that we're going to come down to these weird levels down here of like 23, 24, 25 being obviously the height of that move. So if you go that shallow, then it is what it is. But I think that 23, 24 is probably the safe area where we're going to go. Then we're going to see a little bit of a relief rally. I anticipate that being into the summer. And then we're just going to absolutely see the markets dump in Q3, Q4. It doesn't have to play out this way, but if we just look at the volume here to the volume here, it's absolutely like night and day. Like, I don't know what happened between March 23rd. I mean, I do know what happened between March 23rd and or March 20th, and now obviously the banks collapsed, and now we just saw an artificial push to the upside from here. But now look, the volumes aren't coming in to support this price movement to the upside. This is just absolutely a push to the downside. This is an impulsive move, and we haven't fully realized it yet. But again, it's very evident to me looking at some of these wave structures. What we saw from, what was it, 31,000 down to 27. I don't see this being a bullish trend to the upside, even if the markets do decide to rally in the short term.
So, do you have anything else on Bitcoin? Because I found something I want to look at real quick with you on the S&P. If you can pull up like the historical, and I want to go back because I think that the debt ceiling is what everyone's talking about. Probably not going to default, but what I will say, and what happened in 2011 is the U.S.'s credit rating went down, and most people weren't around for that or don't remember that. It was 12 years ago, but the U.S. didn't default, but their credit rating still went down. And I want to see how the markets reacted. I got some dates here. So we first started to see uh, April 18th of 2011. There was a little bit of negative movement, and then the big one I think should be around August 5th when the S&P lowered the U.S.'s credit rating under AAA for the first time. Can you look and see in that area from like April 18th until August 5th of
Yeah.
2011?
So here's April. Here, I'll do the vertical line so we could keep an eye on where
I'm
we're
just
looking.
curious if there's anything we can like kind of gather, because I do think that there's still a chance that the S&P could lower the credit rating again. It wouldn't shock me.
So the first line is April 18th. It's a Monday. And then let's say August 15th here, which is a Monday as well. This is on the weekly. But we could see let's see how much of a drop that is from the hike to the bottom. It's about a 20% drop. That was 2011. That's a pretty good move to the downside. Again, for not being in a recession, that's a pretty good move to the downside that we saw. I actually kind of remember 2011 because people were freaking out. It was one of the bigger days that we saw a drop in the markets too. Like obviously we think of the Great Depression, we think the financial crisis, and then we look at Black Monday. But this was actually a pretty big one. 20% is nothing to laugh at.
Yeah, so this is where you can bet that the U.S. isn't going to default and it not default, but you still lose there if the credit rating, is adjusted down, which it wouldn't be shocking. So
Sure.
there is historical precedent for it, right? Like as we see 12 years ago, the exact same thing happened in a similar situation where we were running up to the wire on whether or not they're going to raise the debt ceiling. I think it's still a reason to be cautious right now, even though everyone else out there is saying a deal is going to get done. You don't need to worry about it. A deal can get done and shit can still go sideways. And so just something to keep in mind when everyone else is telling you it's going to go up, but they can't provide any proof. Well, here's a little bit of historical reference as to why it'll go the other way. So that's kind of my last thing I wanted to touch on when it came to the debt ceiling.
Yeah, absolutely. And again, if you want to know how much the United States is obviously spending per day, I believe it was yesterday they spent $57 billion in just one day. So yeah, that money runs out fast. And
at this rate, we're going to run out by Friday. Like there ain't much left. It's a disaster, man. It's an absolute disaster.
So the fact that we're going into this with all this debt and not a lot of cash on hand, I don't know, man. That's I wouldn't be too optimistic. Even if you think the deal is going to be struck, I would not be optimistic about debt.
Nope, I don't think so either. All right, that is going to wrap it up for today. Thank you, everybody, for watching. If you have not yet, do us a solid. There are a few buttons down below that we'd appreciate you hitting. The like button, the subscribe button, the share button would be huge. That's like monumental for us. Dropping a comment, any sort of engagement that you can provide is great. We hope you enjoyed today's show. We hope you enjoy the information and opinions that we put out there. So join us again tomorrow, same time, same place. If you can't join us live, watch the playback. Appreciate everyone very much. Bundy, Ace, you guys are the best for being here, and we'll talk to everybody later.
Take care, everyone.